Hey everybody, welcome back to another episode of Green Spud Trades. Today I'm going to tell you about a really silly mistake that I made in my trading last week. Hopefully this video helps you avoid making the same mistake. Looking at the chart of ConocoPhillips, I really like this setup. He had this downtrend break. This is one of my favorite kind of setups when you have a long running downtrend and then the stock kind of breaks out from that. Sometimes you get a little bit of a drop, sort of like how it touched the downtrend line here right there, but it quickly bounced back. Usually that's a pretty good sign. So we had this technical setup here, but also with the fundamentals, we had war breaking out and the price of oil going up. So that helps the oil companies. So I did have a long position in Conoco. So one of my mistakes is that I'm kind of a jumpy trader. When I have profits, I get kind of nervous about them and I want to take the profits right away. And that's exactly what I did here. So let me show you what my trades were. Now, I kind of missed the early part of this breakout because, well, I just was kind of in disbelief that the oils were going to have a good year and rally. But they did. I think the fundamental picture kind of changed with the price of oil going up and different geopolitical things going on. But at least I recognized that, and I started buying into ConocoPhillips here in the low 100s. And I had several trades that were going on and off, so I was kind of in and out of this stock. But the one that I want to highlight is what happened to me on Wednesday night at 2 a.m. So I was up on this lot that I had here. The cost basis was like the mid 110s. Yeah, so I was in the stock. I made some profits. I got out and then I got back in at like 115 or so, 116. My average share was like around 115. I had a little bit of partial profit taking there with a automated stop order, and then it was on Wednesday night, right around here on this candle at 2 a.m. I checked before I was going to bed. I checked my stock quotes, looked at the charts. First of all, I want to point out that the relative strength indicator, it was above that 70 level. So it was starting to feel overextended. I felt like this stock was going to pull back at some point. And I also had my eye on other stocks like Valero here, which felt kind of overextended at the time. So if we look at this Valero chart, this looked kind of parabolic up here, and I was worried about it kind of doing like a pullback. You know, we recently saw this kind of action with silver and also with gold. See the parabolic right there? So I thought oil was going to do something similar, but I was kind of too early in this thinking that they're going to drop. There was no real signs of a blow off top. What I saw in the Conoco chart was this setup right here where it looked like it topped out, and I was thinking, oh my gosh, 124 was the top, and I didn't sell earlier that day. So I looked at 2 a.m. and I saw the stock was down here, and I was worried, that's something that you should never do when you're trading, that this support was going to break down and then the next day fall back down and I'd lose my profits. So I cut the position. But what happened was I not only sold at a lousy price, but the stock rallied backward the next few days. So my thinking was that maybe the Iran war situation was cooling off and then the news cycle would move on, and then the price of oil will drop. If we go back to the crude chart from that Wednesday at 2 a.m., it was the price of oil was like around right here too. So I thought that correlation was going to drag down Conoco. Looking at the longer term chart, it was right here. I was thinking, well, maybe it wasn't going to break through this downtrend line and then it was going to fall back into range. So I was kind of anticipating that. And then I was also holding shares of Oxy, and I did the same thing. I had a really nice gain from 46 here, and I looked at this chart and I was thinking, oh my gosh, I might lose it tomorrow. So I sold right here at the bottom again, and then I missed out on a good $400 or more in gains. So there are two things that I think could fix a problem like this in trading. One of them is to have price targets that you preset. Try to sell into the strength rather than wait for it to drop like that, because a lot of times when you get a little bit of a dip and it's still trending, it'll bounce right back from the dip and continue its trend. Maybe it's not a good idea to try to prematurely sell, or at least sell all of your shares going into a little dip like that when your stock is trending up. The other thing you could do to avoid this mistake of selling out your entire position, missing out on gains, is just to take profits incrementally. So what was really silly that I did, that I'm really disappointed in my trading about, was that I took all of the profits at once, where it probably would have been more reasonable to take like a quarter of the profits if I was just concerned about maybe the trend reversing, and it was kind of maybe a moderate probability that was going to happen, but not a high probability. Just take off some of the gains instead of taking off the whole position. So that way, if it comes back and you lose some of the gains that you had, at least you didn't lose all of them. You took some profits while you were up. But when you're in a trend like this, there's a very good chance that'll continue, and then you'll continue to make the profits. I want to show you a chart where I kind of did this more correctly, and that's with this biotech company called Guardant Health. What I liked about this chart that got me in the trade was that I saw that there was a breakout here. I bought some here on this little dip here back to this when it bounced on the uptrend line in the previous support that it broke through. And not only that, but there were also good signs that it was going to break through this resistance level already. So I already had the position ahead of time. But I took my profits incrementally. See how many arrows I have there? I had these orders all lined up. They were limit orders. And then for the last lot, there was a breaking news, and then it was up big. So I took the profits. Although here I actually made the same mistake. I had 35 shares. Maybe I just should have taken off 10 and then tried to ride the rest, because I could have sold more for this 110 up here when it had this little mini parabolic. That's a brief analysis of a trade that I kind of messed up. I could have done it much better, and just want to show sort of what I learned from that experience there and pass on the knowledge about incrementally taking your profits.